Hey everyone, welcome back to In Her Wallet, a weekly podcast helping women around the world take control of their finances for good and build better financial futures one episode at a time. My name is Sofiia. I'm your host, the founder of In Her Wallet, and an accredited investment representative here in Canada. Today, I'm answering the most frequently searched for question on Google, which is what are the best investment options for beginners, or simply put, what do I buy? I want to make sure that you leave this episode knowing what type of investor you are, what are the best investing options for you as a beginner, and the 4 pieces of advice to keep in mind when starting to invest. Sounds good? So let's dive in. First things first, before you start investing, there are 2 things you need to consider: what type of investor you are, and what are the investment options available to any regular investor out there. Let's start with addressing the first one, because understanding what type of investor you are will help us determine what to invest in and how to invest in. To understand this, there are 4 simple questions I want you to ask yourself. How much money you have? What are your goals? What is your time horizon? And how active do you want to be when it comes to investing? If you're like, wait, what is time horizon? Time horizon stands for the length of time you are willing to hold the investment for before you need to sell. With investing in the stock and bond market, the shortest period of time that's acceptable is 3 years. If you will need your money before that, it is not probably a good idea to invest in the stock market. Consider other instruments we've actually highlighted in a previous episode about short-term investing. But that's really the only note I want to add here. If you've answered all of the questions I just highlighted, let's move on. So, what can you invest in? The term investing covers a broad range of opportunities available out there, including stocks, bonds, mutual funds, commodities, which are your gold and other precious metals, real estate, art, NFTs, exchange traded funds, you name it. There are so many opportunities, but because today we're talking about beginner options, I would like to focus on 2: stocks and exchange traded funds. Let's explore these 2 in more detail because it's very important to understand the basics. Once we go over that, I'll give you guidance on what you can potentially buy. So, what are stocks? Stocks represent ownership in a company. When you buy stock of a company, you become a partial owner of it, where the degree of rights you get depends on the amount of shares you own. You can buy stocks on a stock exchange such as TSX, the Toronto Stock Exchange, or NYSE, the New York Stock Exchange. Back in the day, you had to be physically present at these stocks exchanges or have a representative do it on your behalf. Now everything is done electronically. You can do it from the comfort of your phone or a laptop, as long as you have internet connection, of course. Next, all stocks can be split into 3 main categories: small cap, mid cap, and large cap. Market capitalization stands for the measure of the valuation of a company. Small cap companies are worth 300 million to 2 billion. They are in the beginning of their journey and they are not generating profit yet. Mid cap companies are those in between the small and large cap. Of course, they are anywhere from $2 to $10 billion in valuation. There is a lot of growth opportunities for them and they're starting to generate revenue. And finally, the titans of the industry, the large cap companies. These are the companies that are worth anywhere from 10 to $100 billion in valuation. They are your Amazons, Facebooks, Microsofts, and so on. They have a proven track record of success. They oftentimes pay dividends regularly. However, there is not that many growth expected from them. Now, what affects the stock's price? There are 3 main things you need to consider. Of course, it's company's performance, pretty straightforward. It's also macroeconomic trends, which is what is happening in the world and in the economy in general. And finally, investors' psychology. As you'll come to learn, it drives a lot of activity in the investing game, and those who can manage it well will definitely come to win. Now, you're probably wondering, but which stocks do I buy? While I can't give you exact names, here are some guidelines to consider. As a beginner investor, consider buying stocks of well-established companies with a solid track record, those large caps we've just discussed earlier. When it comes to industries, consider the fact that we are actually heading into recession, so purchasing stocks of companies that do well during bad times, like utilities, healthcare, and consumer staples, could be a good idea. To lower your risk with investing, also consider investing in multiple companies across different industries. Remember, diversification is key. The second investment option for beginners I'd like to introduce you to is exchange traded funds, or ETFs. As stocks represent ownership of a company, ETFs represent ownership in multiple companies. Think of it like basket with different fruits in it. ETFs are traded on the stock exchange just like the stocks and are often run by a manager or an algorithm. They often follow a particular topic or theme and, unlike stocks, provide instant diversification across multiple securities. Again, the question sitting at the top of your tongue is probably, which ETFs do I buy? As a beginner investor who is just starting to build their portfolio, a good foundation could be investing in a total market index ETF, which can be focused on a particular market like Canada or the US, or be global. There is a big variety of ETFs available out there. A good place to start would be to simply Google ETFs in your country or wherever you're interested to, read the description, and see which ones relate most to your goals, needs, and time horizon. Now that we've went over the two main investment options for beginners, from my sole opinion, I want to go over the four pieces of advice I think you should keep in mind before you start investing. First one is to invest gradually, or as they say in professional terms, dollar cost average. Dollar cost averaging is a proven strategy that instead of investing all your money at once, it is best to spread it out through regular time intervals to achieve average price because markets fluctuate. My second piece of advice is to diversify your portfolio. Key factor to success with investing is diversification, as we all know. By investing in different geographical locations, industries, asset classes, you're able to lower the overall risk in your portfolio. As a beginner, start with one asset class, such as stocks or ETFs, and diversify within it by different industries and countries. Research shows that the average diversified investment portfolio holds between 20 to 30 stocks, so that means they would be diversified geographically and industry wise. My third piece of advice is to really research and understand the businesses that you are investing in. While you don't have to be an expert when it comes to investing, you really need to understand the companies that you are buying, such as how they are earning money, the industries they're in, and who is the management in this company. And my final fourth piece of advice is to buy and hold. Taking it back to the point about investors' psychology, as I mentioned, our emotions drive a lot of activity in the stock markets. In the short term, yes, markets fluctuate. So you can feel really eager to sell if you see your money or your portfolio value go down. But remember, we're here for the long term, 3 years or better, even more. So really just be patient and let your money grow steadily. Now, if you're looking for next steps, make sure to check out our episode from May 17th called How to Choose the Right Investment Platform for You, because opening a trading account will be your first step in your investing journey. And in that episode, I go over everything you need to know and consider when opening a trading account. And with that said, I thank you all for being with me today. Please share this episode with your family and friends and whoever you think might find it useful. The biggest thing that keeps me going with the podcast is hearing your feedback. So please make sure to leave us a review, which helps us grow, or send me a DM. I love to hear back from you. Thank you all, and I'll see you next week.